If you think we'll be in the clear 6 months from now, then you have to swap into the recovery stocks now. Because if you wait for the all clear, the actual all clear signal, I promise you'll be too late. And listen, I'm betting that it is the real trough. I suspect the cyclicals, industrials, and banks could lead us from here. Not the COVID stocks, although that doesn't mean they'll be destroyed. Why? Okay, what I'm going to do is I'm going to just walk you through this. I'm going to give you 12 tells that suggest this move's genuine, or at least more genuine than the other, because obviously by the collapse at the end of the day, you could say nothing matters, okay? I don't believe that. I'm not that cynical. Let me give you the underpinnings, all right? First, gold prices are plummeting. As long as gold was going higher, you had to keep the prospect of financial Armageddon on the table. Today's huge decline in the precious metal says maybe we're going to be fine. Second, interest rates are soaring. That's a textbook sign of either a stronger economy or a lot more government borrowing, like we get if Congress can pass another stimulus bill. One way or another, it's good news. Third, oil's been making a stand in the low 40s. That's where many producers in the Permian Basin can actually survive. It's also an important sign of stronger demand. We don't want a collapse of the Permian. Fourth, there's real demand for travel. It's surprising. Royal Caribbean reported an awful quarter. Their ships can't go anywhere. But the stock soared because they're getting a normal amount of reservations for next year's cruises. Once we get a vaccine, people are fine going on cruise ships again, which is huge after all the terrible COVID headlines this spring. The airlines are starting to see a pickup in traffic, too, admittedly, again, off a very small, low base. You can't wait until they're half filled, though. You have to get in ahead of the turn. And Marriott says the bottom has already been put in. Airbnb is going public, for heaven's sake, a sure sign that things have turned up. Fifth, the biggest shopping center owner, Federal Realty, which we will hear from later tonight, and the biggest shopping mall owner, Simon Properties, have seen major increases in rent payments month over month after a hideous period of deferrals and outright defaults. Not great in absolute terms, but certainly relatively better than where we were. Many of the things I'm talking about are relative versus absolute. Six, it looks like the autos, at least in Europe, are back. Today, PPG, giant chemical paint company, pre-announced a sharply better than expected number, driven by paint for high-end cars, particularly European. Anything that's good for cars is also good for DuPont, a stock we own for the Chapel Trust, which you can follow along by joining the ActionAlertsPlus.com club. I'll be talking about DuPont on our Thursday club call, which you might want to listen in on. Seventh, Boeing reported some heinous order numbers, and the stock went up anyway. And that is what a bottom tends to look like, although it was up much more during the day than at the close. It's also extremely bullish for Boeing suppliers like Honeywell and Raytheon. Remember, that's the old United Technologies. That brings us to the eighth tell. Honeywell caught an ugly downgrade today. Its stock rallied anyway. We also caught a negative 3M note. Now, this was really incredible. It said basically if the Democrats win, then this company's going to be in real trouble over groundwater pollution. But it didn't matter. 3M stock went higher anyway. Ninth, Caterpillar's last quarter was truly disappointing, and I couldn't think of a single reason to buy the stock. But others look at Cat as the sainted industrials, the one you have to reach for and hold for the fabled $10 in earnings power if the economy turns around. Sure enough, Caterpillar keeps climbing. 10th, the banks. A week ago, everybody was worried about J.P. Morgan's escalating bad loans. I was watching Brian Sullivan's show. This guy came on and said, listen, they're going to have to cut all their dividends. Well, that was not very, let's say, in keeping with what ultimately happened in the last week, because Wells Fargo was considered on the ropes, but not anymore. Goldman's been trading below book value, and people were just sick of owning Bank of America. Suddenly, though, this group has come alive, which suggests that the bad loans might run their course sooner than expected. And Jamie Dimon looks like he's got it going again at J.P. Morgan. 11 tells Nike. This thing's a fabulous bellwether for the whole apparel cohort. Yesterday, Foot Locker reported a much better than expected quarter. Nike roared in response. Then it spent most of the day going higher before giving up the ghost at the end of the session. Apparel's been in the doghouse for ages, but if Nike's back, that's a very big deal. You might want to look into that one, especially if it goes below 100. Finally, number 12 is freight. United Parcel put up an amazing number last week, which created some phenomenal pin action for FedEx, although they both got slammed today after nice openings. The rails have been rallying, too. They're very economically sensitive, and they continue to run today. Very important. The transports rarely lie.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com. Or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.